Friday, January 12th, market analysis, Stan Ehrlich. Good morning. We're 10 o'clock California time. I start out with the stock market indexes, go to the futures, and occasionally move into some forex and sectors, or maybe cyclicality, possibly something else. So my first chart is almost always the E-mini March futures. If you have any questions, comments, I don't care, you can contact me at info@ersignals.com, please. I have been talking about this market, meaning the overall market, meaning the S&P, Dow Jones, NASDAQ, etc., topping out. I actually got an official ER sell signal, my automated 100% automated trading system sell signal back on December 20th. But it didn't work the way I would like it to work. But we haven't gone anywhere either. So that's interesting. So at least it marks the beginning of this sideways trading range. But the fact that it made a higher high than the signal day punches me out of the trade. And it could have happened even earlier than that. But my fail-safe stop is just immediately above the high of the signal day. Period. Discipline, code, no question about it. Doesn't change unless the trade starts to work, and then the stop starts to move in my favor, almost tick for tick, certainly minute by minute, if need be. What have we got? A doji today. And yesterday, the day before today, all those prices at the high of the day are approximately at the same high a couple of weeks ago. Interesting. I would call that a possible double top. You don't really have a double top until you close below the low between the two highs. So we're far away from that. And if you do close below 4,700, then the minimum expectation, not guaranteed, that's for sure, price move down would be the distance from the average highest high and to the low between the two, and then down to, guess what? It comes out right around the same level I would have expected anyway, which is nice. Now I've got a second reason to believe that around 45.90-ish is going to be the low if the double top kicks in, which it has not yet. I like to see things before they happen if I can. So we're a little lower today at the moment, and yesterday closed a little lower. So we have a bearish engulfing yesterday. That's interesting because that is half of my ER sell signals. The only half I'm missing is the custom RSI overbought condition, which we did have on December 20 when we had a bearish engulfing. That's why I got that signal. So, and this is custom RSI. It's also a slight variation on the classic definition of a bearish engulfing. Just a little bit minor difference, but it's basically a bearish engulfing. Now, and this one would fit any definition whatsoever. But I can see, a little bit variations on this. I'm calling this a possible double top. I need to start closing below the lows of the last previous 3 days. That's going to cause me to be real excited. And that could cause, in a matter of an hour or two, a real swift, quick break, which might even get close to the breakout point. Again, about 4,600. Next. Oh, and if it goes higher, well, all bets are off. I'm not in a trade. I haven't got a signal and would probably jump higher quite a bit. And there's real good reasons for jumping higher quite a bit. And that is going back again to the spider. You got to realize that the highest high in history for the S&P 500 is just immediately above today's high. That number is 479.98. Let's call it 479. Let's call it 480 flat, 2 ticks below it. Here's a green line at 98. Excuse me. And today we have a higher high. The whole trend, but barely. It got smacked again, and it's now starting to lose strength. True, at the moment, we're dead unchanged. 4 ticks higher, no big deal. The DIA I'll get to in a moment is down a 1.5, and the Qs are just down a few ticks, like the spider is just up a few ticks. I'm looking for, and it hasn't happened yet, another bearish engulfing. Friday, end of the week, maybe it'll happen. A lot of people like to get out of situations or maybe even into situations, probably out on a Friday before weekend, especially, before a 3-day weekend. Martin Luther King Monday, holiday. So let's see if that applies. But anytime there's a national holiday where the exchanges are closed, I forgot whether it's closed on Monday or not at the moment, but that could be a further reason. You're open to worldwide events of some sort for 3, not just 2 days, if you have a 3-day weekend in front of you. A little bit more uncertainty. So looks like it's topping out to me. And we're going to go to the spider 1 minute. We opened, we popped up right away and made the minor new high. Now remember, this is a 1 minute vertical bar chart. Doesn't matter if it's candlestick or vertical bar chart, the same thing, just colors. Okay, so this does appear to be in the general area here for the last couple of hours where it could fail again and we could see another sharp break, boom, down. But I got to get down here below yesterday's low in order to have that bearish engulfing. That would be 72 and a quarter, 472 and a quarter, and we're 76 and a half. So I need another total 4-point break. We're up a few ticks. Next chart is the DIA. We had an outside trading range day yesterday, but with a higher close. Now today's high is even a little bit higher. Now this historical situation we're involved in now also applies to the DIA, but a little bit different story. We did make new highs for the DIA historically. And again, that top high day historically was January 5th of 22. And yes, I did get an ER sell signal on the exact top of the bull market and the beginning of the bear market to the day. So I'm looking for a bearish engulfing. That'll be a very good sign that I'm going to be right. It's come already very close. Today's low has already been very close. And I think today's high is higher. The high today, 378.25. Yesterday's high, 378.12. So yeah, we're higher today than yesterday, but we haven't got the lower low yet. That would generate the bearish engulfing. I need to stay lower on the day. I don't want to rally higher than yesterday's close on the close today. So that's a necessity. But it's pretty likely once we get the outside down day. That is going to put us into a very aggressive opinion about the market topping out. I will have the high day pegged, but I'm not going to get a signal because we're not overbought, and that's the unfortunate part of it. And we're not even all that close to it, but hey, close, but no signal. Next, Russell 2000 is not quite the same situation. It has been bouncing off support. It is nowhere near the previous high a couple of weeks ago. And so it's simply going to continue its decline. It has the support area slightly lower. I think there's a chance we could bottom out in there. And there's other levels at lower levels, but other levels of support a little lower. So next, we've got the daily data QQQ. And it is like the S&P and DIA trying to make that double top. These highs in the last couple of days are very close to the highest high, which was overbought. You know from listening to me for, 360 YouTubes or something, a little over a year and a half, I think, that I love overbought and oversold. Now, granted, it is not Wells Wilder's usual, I was just tutoring somebody, so let me change back to my classic, just to say my custom, enable, disable, RSI custom, good, and disable Wells Wilder's, where I originally learned this from, indicator. Just a moment. Sorry about that. Well, I'm just going to squish it down so it doesn't see, you can't see it. And there's too much room for this. Now we're back to good. So if we break below this low, you're going to have the double top done. The minimum downside objective visually and probably pretty close is down to the 378 area. That works for me. I'm not bearish, mind you guys and gals. I'm only correction, dip down oriented. I'm bullish intermediate to long term. What does that mean? The next month or two, new highs. And after that, higher and higher and higher on the average. But there's going to be plenty of these 1, 2, 3, 4 week periods where the market dips back down some. And I'm always trying to catch some of that move and help you not get in too quick or too late or whatever the heck it is. Next, March NASDAQ futures. Yeah, double top sort of, not quite as close as the Qs, but it's very, very, very similar. And it did bounce off of support. And it is a doji inside, nothing range so far. Dojis don't really lead you very well to, in my opinion, a move up or a move down. It's like it didn't occur. They're kind of neutral. And we're back to the DIA daily, or 1 minute I meant. Okay, futures, futures, futures. The S&P 500, probably turn that sound off. I think you heard that. No, I don't think you did, so I'll keep it off. Sorry. Double top, maybe? Pretty accurately here. And again, you can reach me at info@ersignals.com. So no really added commentaries on the S&P continuation contract. It moves up and down, just like the individual futures contract. We're using the March at the moment. But the price levels are different. So you kind of ignore the numbers, but you want to watch the price action, the patterns, the rhythms, the support and resistance, and all the other stuff. It's just the numbers are different. Next, NASDAQ futures. Same comment. That's not correct, so skip that. We had a little problem because of something or other. So there's not really a buy signal yesterday. Skip it. It's white. We did get legitimately a sell signal early December 20, so that's fine. Double top maybe. Looking for a move down to probably 15,900. Next, bonds. Resistance for the second day in a row. Stop this little rally. I think they're going to make new lows. I am not bearish. I am correctionary, if you will, for the continued dip, just like the stock market indexes, for maybe a week or two or three, probably down into this red support area, and then a new high for the whole trend. This buy signal that I got on the bond market is going to be there, in my opinion, for years and years to come. My trading system, ER Signals, frequently picks major long-term, many-month, if not year, turning points to the exact day, period. You guys who've been watching me for a year or more know that's a fact. A great example was October 13th of 22, the bottom of the bear market, the beginning of the 23 bull market, which in my opinion we're still involved in now that we're, the 12th of January of 24. So, long-term tops and bottoms only happen once in a long term. And if you can pick that day, kudos to you. There it is. Give me my kudo. So I'm looking for lower levels, further correction in what I consider to be a long-term bull market trend, and then turn up. I would love to see, I may or may not get it, another buy signal like this one sometime in the next 2, 3 weeks, 4 weeks at the most. Next chart. 10-year notes is basically the same. The numbers are different. We also picked almost the exact low day, and that was the same date, October 23. In the 10-year notes, they both turn bonds and notes at the same time. This is an ER3 entry 2 days later. Whopping great trade, huge. It was about, let me see here, 106 up to 11 and a half. Not too shabby. Next, crude. Stopping on a rally, looking like that failed, a little resistance, and coming back down to support. Not quite sure what to say here. Support is holding real good. We did break this line. That is significant. I talked to you yesterday about this maybe being a head and shoulder bottom. There's your little shoulder and shoulder. There's the head. There's the shoulder. So both of these are really the shoulder. The lowest low, of course, is the day. The lowest low is the day. It was oversold. And the lowest low is the day. But it's got a couple of parts to it, and a couple of parts to it. Symmetrical. That's good. But when we cross this neckline, you should not come back below it again. That's the rule. Violating the rule a tiny bit is sometimes acceptable, but not like this. This is way back below the line again, and that should not be happening. So I'm pretty much going to abandon the head and shoulder bottom idea. What do we got? Downward slanting channel, sort of. Bear trend, definitely since September. A lot of support that is working since early December. So the real bearish signal is going to be below 67.99. You start closing below that, and crude oil is going to keep going down a bunch, probably. There's always a chance for a double bottom, maybe, but we're not there yet. So I'm expecting it to challenge the bottom of the support area. Next, natural gas, overbought, minor double top, maybe, too soon to tell. Don't have too much more to say, but it's a very, very long-term, big sideways trading range that we're bumping up against, and it's a little unlikely, especially since we're overbought, that we're going to be able to get through it. So I'm looking for a bearish turn and a move down to test the lows and maybe even make new lows. Next, heating oil. Top of the resistance area, stopped it. We're now unchanged. So I think this is the beginning of a swing down. All the other things apply. We have a downtrend over the last few months, lower lows, lower highs. This changes it a little bit, but not too much. Not enough to turn me bullish, since I think this is going to fail. Looking for lower levels. Next, gold. I do think this could be a head and shoulder top. I have drawn in for you the neckline and the minimum downside objective, which would be around 1835. That's a pretty substantial move. It's going to take 2, 4, 6 months, if I'm right. Bear markets move down faster than bull markets move up, like this break here, for example. So maybe it won't take 6 months. Maybe it'll take 2 to 4. But we need to close below this neckline in order to have the shoulder, the head of the formation, which is the bearish engulfing ER sell signal, along with the first shoulder, and overbought in the last shoulder. But unfortunately, I didn't quite get a sell signal out of it. Too bad. But the pattern is there. I like the way it looks. Basically, I like the way it's acting, even with this little rally today, because there is a little rally on the left side of the first shoulder. And now on the right side of the last shoulder, there's also a little rally. We'll see what happens. Looking for down. Silver has something very similar, but I really can't make the argument that it's as good a looking head and shoulder as gold. You've already broken the neckline, drawn off this low and this low, and it's not behaving at all like a head and shoulder top. So what have I got? Support held, oversold, bounced today. I think it's going to go nowhere and down with the gold. The gold is kind of the key to watch closely, and silver might lead the way down, but I need to have that gold come with it. Platinum, oversold down for 3 days, today too. A higher high today, and if we get below yesterday's lows, the closing price yesterday was super close to yesterday's low. So what happens when I'm oversold and I get lower than yesterday's low with this condition exactly? I will have an outside at that moment down day, but a very small rally will turn the current quote and maybe the closing price above yesterday's close. And if that happens, it will turn green. I will get a buy signal, green like that one, green like that one. This is also red. It made a little money only for a day or two. Wasn't very good. Outstanding. That's platinum. Next. Lower low for the move in copper. Coming down, support. Probably reach that easily. 3.6 is what I'm looking for. Maybe even testing these lows back here in October. Major long-term trend is down over significant periods of time, say month to month or 2 months to 2 months, maybe even longer than that. The highs are always lower than each other ever since this top in January of last year, a year ago. So you have to say this has got a long-term bear trend intact. Now we got a great sell signal here, red. A couple of buy signals a little premature, unfortunately. There's a buy signal that was very, very good, but not the low. I love the low. Look at that one. That's the low. And now we're getting another buy, but it only lasts a couple days. I don't claim that the ER signals have a red or green signal on the exact high day or low day of intermediate, minor, or major moves all the time. I'm not crazy. I do claim, and you do see it, and I do prove it day after day, that frequently some of these signals are whoppers long term. How about that one? September 28th. And remember, this is not opinion, it's a algorithm. It does what it does because it's supposed to. It doesn't have an emotion. It doesn't care. Black is black, white's white, and that's it. It gets in, it gets out. That's it. Next, soybeans. Oh, big break. Well, this is not quite what I was expecting. I thought this would hold 4 days to about the same lows in oversold condition, but this just simply slam dunked into a very oversold condition. So now I am actually more optimistic that this is about to rally. I didn't have any signal, so I didn't buy it. So I don't trade it unless I get a signal. That signal was a signal, period. That signal was a signal. That bearish signal was a signal. And since I watch 12,000 stocks, TradeStation scans them for me. I am not doing it. TradeStation does it for signals every day. I usually get 5 or 10 stock symbols every day. And all the major commodities, which you are looking at every day, but there's only 23 on my list. So they're a lot less frequent, but they are frequently very profound. So I'm expecting to turn back up, but not yet. Don't get antsy on me. Next, bean oil. Bearish engulfing. Nowhere near one of my signals because it's not overbought. But this looks like it's about to make new lows to the trend again. It just barely got up to resistance accurately. And then it turned down, down, down. I was looking for new lows. Next, soybean meal, like oil, is new low ground, or beans was new low ground. Sharp break, coming back reasonably well, but nowhere near good enough. Oversold down to about 10. Now that is very oversold. I like oversold under 25. Anything lower than 25 just gets me more and more and more psychologically, mentally prepared for a buy signal, but I don't jump. I need a bullish engulfing with oversold condition combination. For meal, that one worked, I would say, very well. Green, October 7th of 22. So I'm waiting. I wouldn't go short. Next, corn. Boy, all the grains are doing about the same thing. Dropped in the low ground sharply. I wonder what wheat's doing. Oversold, not quite as substantially, down to about, somehow my price scale disappeared over here. I got to fix that. I'm going to say 20 or so. Anyway, don't go short down here. You're selling into what might be a bear trap. This should turn around and rally some, not a lot. I don't see it at the beginning of a bull market very soon. Wheat. Starting to make minor new lows. Only a matter of time, I think. Maybe next week, we're going to see new lows. Next, cattle. Nothing interesting. I don't think this rally is going to continue much. Yeah, I think there's a possibility of 182, but that's a stretch. I really don't have much more for you in this particular case. I just don't think the rally is going to succeed, and I think it's going to break down decisively so pretty soon. Next, hogs. Resistance has stopped it in the last 3 previous days, and maybe it'll do it again today. I don't see any lower lows. I don't see any close below previous lows of any consequence yet. So there's a chance it could move up a little bit more, but I got no faith in it long term. I think it's going to give me a signal to go short soon. Next, OJ. Here it is. Ladies and gentlemen, we got a sell signal on the first shoulder of a head and shoulder top, and we certainly didn't know it at the time. Worked great. In fact, right down to support, oversold, perfect what I look at and teaching all the time, turned around. It went up and made new highs for the move. Bearish engulfing ER sell signal. Perfect. And when I mean perfect, now since November 21, we just hit yesterday a lower low for the move. That's the end of November, all of December, and the first week now of January. Call it a month and a half. We were short, but we did get stopped out a little too soon, January 3rd. I'm not complaining. Don't cry over spilt milk. Great money. Last shoulder high. A day earlier than I had pegged in advance, a little lower than I had pegged in advance, and that was I was hoping for 396, and I was hoping for December 13th. It was a day earlier, and it topped out around 82, 382. But it did. The neckline has been drawn. It broke out, and we had 1, 2, 3, 4, 5, 6 days in a row straight down. A couple of them, 2 or 3, big. We're still short. It rallied, hit our stop, took a profit. Came up a little bit more, top of resistance, started to fail. Didn't get overbought, but resistance still is supposed to stop rallies. Now, this is an official new long ER buy signal, period. I'm looking for the market to start to rally, obviously up to resistance first. 324 is my short term, but I got one big problem, and that is the trend has changed to down overall. So I'm bullish short term because of the signal, but I have to be very careful about these resistance areas and other reasons for this rally to stop. And I do think it's going to rally more. Now, yesterday was the ER buy signal. So today I could buy it on ER3, on tomorrow and the next day at about 299.17. 299.27 is the exact number. Not that it's an official recommendation. I used to have a commodity broker's license for 35 years, a stockbroker's license for a while. I was a hedge fund manager, and I've been teaching technical analysis since the 1980s worldwide. So don't take it like the gospel, please. It's my system. It's where I would consider being a buyer. The system will buy it, ER signal system, if it touches that in the next 3 days. Next, cocoa. Surprise, surprise, I'm not getting a shoulder. I thought it might stop rallying yesterday and turn down, which it did not. So now we have a new high of the trend, back in full bull market mode. And it is obviously a long-term bull market. So where do we go from here? Probably, I'm looking at the size of these downswings and up moves. I'm probably looking for 46.60. Something along those lines seems quite plausible. Next. Coffee. New low, maybe a new low close. Seems likely, but we're not closing below the previous low 4 days earlier, which could happen. Obviously, I'm bearish. Overbought up here, turned down. We bounced a couple of times in the process, and it's perpetuating the bear move down since being overbought. Looking for lower levels. Next. The oversold condition in a tiny little 3-day double bottom is still okay, but the trend is obviously down. The last major high was April last year. And then we had a new high with a bearish engulfing at the high November 7th. So November 7th is the highest high. And by the way, it came close to official sell signal for my ER system, but it wasn't overbought. So the code didn't turn it red, which it would have if we had all the criteria necessary. What happens now? Resistance, previous lows, banging into or very close. Resistance the last 4 days, lower close likely for today. I think it's about to swing down to 2016 and lower. Cotton made some minor upside progress, not holding it very well. Don't have a real solid idea here. Back to the E-mini. I see we're just a little bit higher on the day at the moment, 34. Still down $1.20, 30 on the DIA, and up just a tiny bit also in the Qs. So you know how I feel. Express your opinion. info@ersignal.com. Guys, have a great trading day. Signing off.